The first thing I'd like to talk about is we have talked about the potential for stagflation for the last several months. Stagflation remains very much front and center. Stagflation occurs when inflation is stubborn and growth slows down. It's one of the worst of all worlds. Now, the graphic you see in front of you, I'm going to explain it in a more complex way than we usually do. Up in the upper left-hand corner, it says this graphic represents a holistic view versus a specific view of the market. To explain what I mean by that, think about having a puzzle. And having that puzzle, all you're seeing are individual pieces. That would be a specific view of the market. Next, picture the fact that you have some idea of what the finished puzzle would look like, and each piece fits someplace in that puzzle. That is really what we're trying to do when we talk about market-generated information and taking a holistic view of the market. A specific view is someone that's just looking at indicators. They could be moving averages, they could be monthly highs and lows without context. When you're taking a holistic view, that's what we talk about with market-generated information. You're looking at a broader picture of the market and putting each piece in its place. Now, the graphic in front of you, you've seen part of it before, but we'll walk through it. You see the innovative sellers took on the laggard buyers. When the market was going, on an almost perfect trend line to the upside, no real rotation, that's an indication of the late laggard buyers. The late laggard buyers were met by the innovative sellers. When the market broke to the downside, that starts to show you when you have your early adopters, followed by your early majority and late majority. It's too early to tell if we've seen any laggard selling yet at this point in time. But what we have a trend change. The trend is now to the downside. Also, the monthly has traded below the prior month low. It's another indication of a trend trade, or trend change. Normally, markets will go from bull to balance, back to bull, or bull to balance to bear. Right now, it's gone from bull to breaking to the downside, and if the market acts in a normal way, it will seek short-term balance. So it will go break, balance, reverse to the upside, or break, balance, and continue to the downside. Right now, we have no excess. We have no excess on the low. Also, we've got more information coming next week. We talked about the importance of inflation, and you've seen what's happening with interest rates. Don't forget, next week we have CPI and PPI, which is probably the second most important measure of what is going on with inflation. For those that are interested, we're going to have a webinar for this year, starting on Sunday, in order to give you some idea of how to take a look and get started on the new year. Hope to see you then. Wish you all the best. Thank you.
As Jim mentioned, we are having a public webinar on Sunday, January 12th at 10 a.m. Eastern. Essentially, depending on where you are in the world right now, watching this tomorrow morning. And we will be discussing orientation to start the year, SPY versus ES, and contrast between institutional and retail trading. If you'd like to join us, the sign-up link is below in the description. Thank you.